We're well into the second half of the year, and so how did the secondary watch market perform in the first half of 2023? We'll give you 5 things you need to know about what happened, and we hope these insights are interesting and meaningful to you. All the numbers in this video come from WatchCharts.com. Are you looking to browse listings from the biggest private sales marketplaces across the web? See insights on whether you're getting a good deal or not? Manage your collection and track its value over time. You can do all this and more on WatchCharts.com, the world's most powerful watch market research platform. We'll provide you with the most accurate prices for the watches you can't stop thinking about. Dive into the data yourself at WatchCharts.com. Number 1. The big 3 dominate the secondary market. Here, when we refer to the big 3, we're talking about Rolex, Patek Philippe, and Audemars Piguet, which collectively account for the largest chunk of transaction value on the secondary market. If we use the primary market as a frame of reference for thinking about market share, then the same brands on the primary market, according to Lux Consult and Morgan Stanley estimates, account for about 39% of the primary watch market. When you move to the secondary market, the same 3 brands end up accounting for 67% of the secondary market by transaction value. And so big as they are on the primary market and important as they are for understanding where the world of watches is going with new products being launched, certainly on the secondary market, their influence is even greater because these are really far and away the watches that enthusiasts and dealers are interested in trading and collecting, to the extent that if you want to think about other brands in the rest section, Omega is one that's really big that comes to mind, that make hundreds of thousands of watches at a luxury price point. If we took the market indexes that we compute and publish for the Rolex Daytona, so the 30 references that are most popular for the Daytona, and we compared it to the Omega index, which is the entire Omega brand, not just a specific model, but the 30 most popularly traded Omega references, and just compare their relative size, the Daytona alone is larger on the secondary market by cumulative transaction value than the entirety of the Omega brand. So that just gives you just another touch point for understanding how absolutely massive these brands are in the secondary market. Number 2. The market remains in decline. And so here what we're showing you is starting on the 1st of January 2023 to the end of July, early August 2023, how compared to the values at the start of the year, the indexes for the overall market, and then Rolex, Patek Philippe, Audemars Piguet, and Omega have performed year to date. And so the overall market is down 6.8%, but that's not the worst. AP is down almost 11%. Patek is down almost 8%. Rolex had a little bit of a recovery around Watches and Wonders because of heightened interest in discontinued references that feature on the index. But once that interest subsided, the longer term trend continued to pull the values down. And Omega, even though since the start of the year had appreciated maybe as much as 4% at one point, is now essentially back where it was at the start of the year. And that sort of trend is more broadly based than just the bigger brands that have been on a steady decline over a longer time period extending into 2022 in the past. Even brands like Girard-Perregaux, Bulgari, and A. Lange & Söhne, which had good 2022s or were on an upward trajectory, again, since the start of this year, have not done so well. Again, the overall market index is included for reference, which is down about 7%. And then GP is actually down 7% since the start of the year. Lange is essentially flat. And then Bulgari is only up 2.8% so far this year. And so again, just to put things in perspective and keep in mind the previous learning, these brands are flat or down, except for Bulgari, which is slightly up. But if you think about it in terms of overall market share, these brands are minuscule relative to the big 3. And the brand that has actually done the worst over the last 2 years is Tudor, where we've done a deep dive into what's going on with their value retention. So go check out one of our recent videos if you're more interested in learning about that. Number 3, total supply on the secondary market is still at historical highs. This chart shows starting on the 1st of January 2021, how much, given the inventory level that we could observe in the overall market across all watches, compared to that level, how much inventory has grown over time. And so we see over the course of 2021, inventory starting to build up. And then around December 31st, it spikes almost up to 70% higher than where it was at the start of the year. And then when the overall market index hit its peak, which was in the early parts of March 2022, essentially basically when the market peaked, we see that inventory was actually still building up and actually over the rest of the year continued to pile up until earlier in 2023, it was almost up double where it was at the start of 2021. It has since come back down a little bit, but the longer term trend certainly has been in an accumulative direction. And the trouble with that is that the more that inventory is available, even if demand is strong, and there are indications that demand has remained more or less stable through this time period, because more supply is showing up on the market, inventory starts building up, which means consumers have more choice, which means there's a downward pressure on prices. And so that's part of the dynamic that we've seen play out over the course of 2023. Number 4, in-demand watches continue to trade above retail. And so we'll just go through some of the big names here, starting with Rolex, the Daytona, and the Submariner, the 126610 LV, which is the Starbucks. One of these is discontinued. The other is still in production. And if you look at their value retention, they both trade way above retail. And the 116500, which of course is now discontinued as of a few months ago, but had been out on the market for several years, is up about 30% over the last 3 years in terms of its market performance. And if we look at the Patek Philippe Aquanaut 5164A World Timer, that again is about 70% over retail today, and over the last 3 years has appreciated nearly 100% in its value. AP again, the Royal Oak 15510 in steel, this trades 57% above retail, and then the Vacheron, which is only trading about 17% above retail today because it's been subject to, obviously, just like all of the other watches here, the market decline since last year. Over the last 3 years, it is still up about 76% in terms of its market performance. So this is not to be confused with the value retention number, which is purely just a delta between today's market price and the retail price. The 3-year delta just tells you, given the market price today, how much more appreciated or depreciated is it compared to where it was 3 years ago. And so that's a remarkable run of performance, more comparable to Patek Philippe over the last 3 years for Vacheron. And then lastly, number 5, retail price hikes have deteriorated value retention. Of course, in addition to market prices sort of trending downward since last year, retail prices have risen in an inflationary environment, certainly in the US and, for example, the UK as well. And these are just some of the brands that have raised prices since the start of the year. Rolex did it very early on, as did, I believe, Patek, and then some of the other brands listed here, like Omega and Cartier and Vacheron, followed maybe a little bit later in the year. Of course, this is not an exhaustive list. These are just some of the bigger brands by transaction value on the secondary market, which, because they increase their retail values against a backdrop of declining market prices for those watches, end up hurting value retention. So when you do see that number, this is something important to keep in mind as context for understanding that metric. But of course, retail prices don't just increase. In theory, they can decrease. And the one brand that I found incredibly surprising actually decreased retail prices for not just like 1 or 2 watches, but several watches in their catalog in 2023 so far is AP. And this was so unbelievable to me that I had to include screenshots from their website. And so this is the Code 1159 self-winding chronograph in white gold with the blue fume dial. And this screenshot is from January 2022, back when this watch was listed for $54,100. Today's price, or 2023's price, $48,200. This is, in the AP catalog, the single largest price drop that we've been able to find in their current production catalog. And so, again, to me, just given the amount of time that I've spent in and around watches, it's quite surprising to see that a brand as esteemed as AP would go ahead with a move like that. But could we see other brands adopt this approach as well in the future? It'll be interesting to keep an eye out for it. We may see this sort of behavior given market conditions, or it may just be something that turns out to be a blip. So, given what we've learned about the market, what can we say about what is going to come later this year, or for the rest of the year, in fact? Well, that's a question that we will hopefully answer for you in the next video. If you have questions about the current state of the secondary watch market or where the market is going, let us know in the comments below, and we'll do our best to try and answer them in future videos. Thanks for listening.